Friday, October 1st, 2021, Monaco 64, home of alternative economics and contrarian views. Before I start today, I'd just like to thank all of you for another month of the Monaco 64 community. That's what it's become. That's what Graham Hobbs, one of the longtime supporters of this channel or community, said to me that he feels the channel is more than just a YouTube channel. It's a community. And yeah, I'd like to thank you all again at the start of a new month. And I have to tell you, it feels like autumn or fall out there. It is raining, it's colder, and it's windy. So there you go. But today, I like to show you that there are things out there that are pointing more and more to monetary mayhem. And the word mayhem sounds a bit extreme, I have to admit. But I think it's appropriate. I have been seeing the symptoms of monetary mayhem for many years. I've been awake to the fragile, if you want to be kind, nature of the fiat currency system. We all know, of course, or many of us know that it's more than just fragile. It's a fraudulent system, not based on honest weights and measures, based on how can I say, exorbitant privilege. And that's what finance minister of France, or one of the advisors to Charles de Gaulle, said back in the 60s, that the United States had the exorbitant privilege of being able to import anything by printing money, by borrowing without having any backing to its currency. Is it any wonder that the French were one of the biggest movers in terms of redeeming their dollars that led to the closing of the gold window? So yeah, it's not just the United States. Now the whole system is a fiat currency system, and the people who have benefited the most are the people at the top, the bankers, the big corporations that have access and are a lot of times majority owned by the bankers. And today I'm just going to show you a few examples that tell me that something out there is not right. And the first one is in the real world, so to speak. And yeah, I saw this article in the Telegraph yesterday. And you might think, oh, this is just a silly story. It doesn't really mean anything. Well, I think it means a lot, especially for the fact that we're seeing shortages of everything here in the UK. We're seeing prices rise. We're going to see utility bills go up this winter. We're going to see a lot of people finding it difficult to get a job, to be properly paid. We're going to see a lot of small business, if we haven't seen already, collapse or close down because of all that the powers that be have done in these last almost 2 years now. And of course, again, the big corporations, the bankers, they've benefited from it. They're going to end up owning a lot of the good assets. But the story anyway is inside Salt Bay's restaurant. How can a steak ever cost £630? So it says the celebrity influencer has opened his first UK restaurant to a social media storm, but do the eye-watering prices match the experience? So I just thought, reading through this, I thought of Marie Antoinette and the French aristocracy before and during the French Revolution, how they had a luxurious and sometimes decadent life while everyone else was like starving almost and finding it hard to get by. And there are more examples, of course, than just this new restaurant in Knightsbridge, which is the fancy part of London, of course. Yeah, you see how the very wealthy, and I'm not having a go at the very wealthy. This is not a judgment or anything. This is just to show you the symptoms that there's something wrong. I don't have anything against people being successful, but I think there's something wrong within the system when you have such a disparity, when people can spend £630 or more on a steak, while some people are struggling to get by day by day. So let's quickly look at this article. It says London midweek, Knightsbridge to be precise. Across the country, drivers are sitting in traffic jams outside empty petrol stations. In Brighton, socialists are decrying Tory scum, while senior union bosses are talking of a cost of living crisis. Well, I think the union bosses are right. It's not a cost of living crisis. It's an inflationary crisis. It's a stagflationary crisis. It's the country, unfortunately, the general public falling into poverty. And you probably know by now all the reasons why that happens in the fiat currency system. So it says, but here in the fancy metropolis, in a restaurant on the ground floor of the Park Tower Hotel, I'm eating a £315 piece of steak. It's not even the most expensive slab of meat on the menu. So this is William Sitwell. He's a reporter for the Daily Telegraph, so he went there to see what this was all about. I guess the Telegraph covered his cost like a business expense. But I don't think he'd be going there on a private basis. Certainly the most eye-catching is the signature tomahawk steak, a char-grilled bone-in ribeye that's wrapped in 24-karat gold leaf, and yours for £630 gulp. So there's another sign of decadence that they wrap the steak in gold leaf. My steak is also covered in gold leaf and was just presented by the chef and owner of the establishment. His name is Nusret Gökçe, a Turkish-born butcher, or Salt Bey, if you're going by his social media moniker, something the 38-year-old Sultan of Steak, apparently that's his nickname, acquired after his flamboyant condiment sprinkling technique caught the attention of Twitter users and promptly went viral. Fans include David Beckham and Lionel Messi, and Rihanna has worn a t-shirt with his face on it. He now has 38 million Instagram followers. It's an interesting story, I thought, and he also mentioned, the author, that most of the people in this establishment are people from the Levant. I think what he meant to say, a lot of them are Middle Eastern people from the oil and gas rich countries that come to London every summer, and they own most of Knightsbridge probably, and for them £1,000, £500 for a steak is not much. There's probably also people indigenous British that can afford this, and it's interesting to always read the comments from these stories, and most people thought like I did, this is like decadent. One of the funniest comments, though, a little bit of humor, is that does the price include training for panning for poo the next day? So yeah, so you can I guess get the gold back from the wrapping of the steak. I thought that was a funny one, but I think it just shows it's a huge symptom of everything that's wrong in the system. So here's another symptom, in my opinion, that something is wrong, especially when we're seeing the supply chain unravel. We're seeing like shortages everywhere, not just in the UK. We're seeing the energy crunch. We're seeing commodity prices go through the roof or more. The currency's collapsing versus tangibles. We get this story here. Investment bank fees exceed 100 billion on M&A boom. And how can they just get this 100 billion in an economy that's going down the tubes everywhere around the world? Well, it's the cheap credit created by the central banks. So, and who are the beneficiaries? Well, the bankers, the people who are most probably behind this crisis. They're behind everything, the bankers. I highly recommend you read Anthony C. Sutton's books. He talks about Wall Street, the City of London, how they financed many things in the past. I'm going to put a link below in the description to his Wikipedia, and you can Google his name and you find all the books. And of course, JP Morgan is one of the biggest beneficiaries. And at the same time, this article says deals hit record levels, U.S. infrastructure vote in the lurch, stagflation fears intensifying. So now it's the mainstream is coming out and saying, yes, we have a possibility of stagflation. They're talking about it. We've been talking about this for over a year on this channel. So I would say now that it's baked in the cake if they're talking about fears of stagflation. It's here already, and it's not going to be good. So that's the other symptom there, that some businesses are doing really well. But as I said, it's just because of the easy, funny money. It's part of this rotten fiat currency system. And now the third and final symptom, and this one is more difficult to diagnose or try to predict what's behind it. I think even the specialists in this field of the repo market or repurchase market don't really know what's going on. Yes, there's a guy called Zoltan from Credit Suisse Bank who used to work for the Fed. He seems to know what he's talking about, but I think even him doesn't understand what the repercussions of this is. So yeah, this is the overnight reverse repo. So the repo market is just like a pawn shop for Wall Street, where the major primary dealers, the people that deal with the New York Fed, that's where they take in supposedly safe haven securities from their clients, from other financial institutions, from corporations. They take in those treasuries, securities, and overnight usually, and give them cash for it. So it's like you or me going to a pawn shop and borrowing some money for a day and leaving our watch or some jewelry there. They leave treasury securities. And the fact that the Federal Reserve now is in this market is very unusual, as you can see by this chart. The Fed really, prior to 2014, never really got involved in this market because it's supposed to be a private market between non-central banking financial institutions. And it's not just for Wall Street and New York, it's for the whole world financial system. You will see that there are a lot of primary dealers from overseas in the New York Fed's primary dealer list. And what this is saying is that these primary dealers, they're taking treasuries from the Federal Reserve. They're taking the securities and leaving cash with the Fed, and now it's up to 1.6 trillion. I think it jumped from 1.4 the previous date that they published this number. So it's going through the roof. It's difficult to say what's going on, but one thing that it shows is that the financial system is probably scared of dealing with each other, like the counterparty risk. There must be a problem, and it could be something to do with this deadline of October 18th, where the US Treasury could actually default on its obligations. So this is very serious, and I don't think this would be happening if we didn't have all this money printing and credit creation. And this is, in my opinion, one of the symptoms of monetary mayhem. These symptoms that I talked about, generally speaking, when you have a currency collapse or monetary mayhem, you get social upheaval, political upheaval, economic upheaval, you get crises, things are always bad, you always get bad news. And I have to say, this is what we're getting now, especially here in the UK and elsewhere. We're seeing people in the US as well lose their jobs because of draconian rules, pretty much unfair rules. And just before we look at the markets, I saw something about Singapore. They've got an 82% rate of people who accepted this medical procedure, and now the cases of this thing that we've had for the last 18 months have gone through the roof. So figure that one out. I think things are crazy, and again, that's another sign there of monetary mayhem. And the monetary system, there's something wrong with it. And the less exposure you have to it, and it's getting late in the day, I think, the better financially. Of course, there are a lot of other things that we need to work on, not just financially. And I'm not here to advise people on that. I would say, though, that I heard the other day from a Georgian guy from Georgia, the country, not the state. He was on with UK Column News, which is a really great program here in the UK. They used to be on YouTube, but they were deleted. They have their own website, ukcolumnnews.org. You can Google that. And they do a show Monday, Wednesday, and Friday. They do it live at 1 p.m. London, but then they publish it and you can watch it. And this guy on one of their shows, I think his name was Gavorg. I forgot his last name, but he spoke very good English. And he was talking about the motto of Soviet dissidents during the Soviet Union. And there are three things that they stuck to. Don't trust the government is the first one. Don't fear the government is the second. And the third one is don't ask for anything from the government, so be self-sufficient. I thought that was good advice. So with that, let's look at where the markets are. What time is it? 8:45 a.m. London time. Yes, the stock markets had a really rough September. They didn't finish very well at all yesterday. Let's see. The Dow finished down almost 550 points. S&P finished down 52, and Nasdaq finished down 63. This morning, gold and silver actually rebounded really well yesterday. Silver got back above 22. Gold got back above 1740.41, which I thought was a key support. And right now, this morning, gold is at 1754, down just $2.50. The range has been 1750 to 1757. Silver is up slightly, up a cent or so at 22.18. Range has been 22.21 to 21.97. And actually, the stock market continues to move lower. We've got the Dow future down 217 points. We've got the NASDAQ down 66 and the S&P down 23. The FTSE is down 70 points, just above 7,000. And the currencies yesterday rebounded very little. And I noticed that the dollar's been getting hit hard versus the yuan, which is quite interesting. Right now, we got sterling down about 0.2% at 134.50. Sterling still looks pretty bearish versus the dollar. And I think we're back above 1,300 versus gold. So all in all, gold is performing quite well. And it always does. When a fiat currency has trouble, you see in countries like Turkey or Lebanon, Brazil, and others, when their currencies get hit hard, yes, the dollar goes up against them, but gold also performs really well. The euro is unchanged at 115.82. The dollar is unchanged versus the yen at 111.20. The dollar is down 0.25% versus the yuan. We're at 6.43 exactly. And I think a few days ago, we were trading around 6.47. So it has dropped fairly significantly, I would say, versus the Chinese currency. Let's have a look at the other currencies here. So we've got Aussie dollar down a third versus the dollar at 72.03. The dollar is up 0.33% versus the Canadian dollar at 127.27, and the Kiwi dollar is down 0.2 at 68.82. So now to the general commodities. We've got WTI crude down 0.2% or 52 cents at 74.40. High-grade copper is up 0.2% at 4.11. We got natural gas up almost 1% and almost back to 6. We're at 5.90. Just have a quick look at cotton, which we looked at yesterday. Well, cotton's continuing to go higher, as you can see here. It's up another 3% overnight. We're now at 104. So another bad sign there for the cost of living problem. And just to finish off here, let's have a look at the 10-year yield. It's down about 3 basis points and it's at 1.5%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.